The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 19th. Fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, because I believe we should always be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us. And when you and I, when we make that one small little change, knowing that life happens for us versus to us, that means that we can persevere through anything. We can find the gift in every set of circumstances that happen to us. And circumstances, folks, they're like the wind. They're going to happen to us no matter what. All we got to do is learn to plant a good sail and then let that wind be at our back. It's really one of the questions I often get, when I talk about things like this, is how the heck do you do that? How do you take what's considered to be a bad set of circumstances and find some good in it? Well, it's really simple. Just write this down. It's really all about one thing. It's called reframe and elevate. All you've got to do is reframe and elevate. Oftentimes I'll ask you, hey, is the glass half full or the glass half empty? Your answer to that will help you reframe and elevate. It's always got to be half full out there. It's never half empty, right? How about, let's just take example. How about the crash of '87? Is it not every single October where all of a sudden, as we get there, people are like the boogeyman, like in October, the market's going to crash down. Reframe and elevate. Let me give you an example. I've shared this with you before. I'm going to give you a gift here. I'm going to give you a Christmas gift, Hanukkah gift, holiday gift, whatever. This is going to be one of the best gifts. I've really shared this for you in the past, but we're all visual. If you want to learn anything, if you want to teach somebody something, remember that we're all visual. So you've got to use good metaphors like glass is half full, glass is half empty, right? That's a visual. You don't even have to see the glass out there. Well, by the way, I hope everyone did have a terrific Thursday. Sorry that I wasn't with you. A little bit of just routine maintenance on Stevie yesterday. The coast is clear. That's a good thing out there. I want to thank John Logan and Tom O'Brien for filling in for me. Of course, it is great to be back with you, and hope you had a great Thursday. Of course, this is TFNN. I'm Steve Rhodes, and welcome to the show. Of course, our call-in number is also 877-927-6648. Internationally, you can reach out at 727-445-1044. But let me give you the gift here. This is the gift of giving. Remember, reframe and elevate. So October, right? You know that when I say October, you're thinking the market could crash, right? Well, let me give you the best gift here of October. In fact, let's go back first. Let's go take a look at that October-ish crash out here, because what you're going to see, and hopefully you're watching us on TigerTV in full HD. Of course, don't forget, you can catch the archive of this show on Channel 9. So that's a beautiful thing. And if you're watching it, you can watch it live on your phone, your smartphone, your device out there. Just come on over to the homepage at TFNN.com. Up in the upper right-hand side, you'll see a button that will go ahead and allow this to stream live to your device. But if you had bought the October low in October of 1987, and this is the Dow that we're taking. Look, that's, by the way, that's right back here where my little cursor is. So here's the October low in 1987, right? You would have bought that. Now, that's not as important as really what it is I'm about to show you. Reframe and elevate. If you can learn to reframe and elevate, and anybody can do it, it's really a simple task out there. But let's go take a look at all the other October lows, right? Remember, as the markets were moving down into this October, because of the Ebola scare primarily out there, right? If we had anticipated, because the ultimate power in life is anticipation, right? Anticipation. Losers react, and what do leaders do? They anticipate. And you're a leader out there, so it's all about anticipation. If we go take a look at this chart out here, and all the arrows that I've got, this is the S&P 500, by the way, so that's what's on my chart out here. Now, the yellow arrows, I've got some yellow arrows and some red arrows, because we can learn from failure, we can learn from success. What I can tell you, seasonally speaking, going back as far as you want. Now, I've gone back 40 years. You can go back 60 years if you want. Doesn't matter what you're going to find is there's a common element with regard to those Octobers. in October. Sometimes it can extend into the early part of November. But right around that time of the year, and it's usually in October, the market makes a low. What took place? Let's just go from right to left out here, because I want you to understand exactly where it is that we are at in the market. So let me just expand this. Number one, you're going to see a trend line out here, an important trend line, by the way, that begins in, is this a coincidence or what? No, I don't think it's a coincidence. That trend line, by the way, beginning here, this is a weekly chart that we're looking at for the S&P 500. That began when? October. Oh, how could that happen? October of 2011. All right, so that's an important trend. If we go ahead and we take it, that trend line, where's the next bottom level? In this case here, it happens in November, the week that began November 12th. Remember, the October to November, right around there, we see significant lows in the marketplace. Well, if we take a look at this trend line out here that took place this past October, we take a look at those first two touch points out here, we can see the price moved down as it was moving down into that October low. Where? Right into that trend line. Nonetheless, look at the low that was formed out here in October of 2013. That marked a higher low. Marked a low in the move out here. When did the move back in November the 12th mark? A higher low. Marked a low. How about the October here of 2011? Higher low, marked a low inside the market. Hey, how about here? Even back in October of, this actually took place on November, the week that began November 15th, back in 2010 out here, marked a low. That eventually was taken out. When it gets taken out, okay, eventually got taken out there. And that didn't occur. The high was formed in May. Go figure, in May. It was really, you had the May high, and then, of course, you had the July high. July is a key month inside of the marketplace out here. Come back a little bit further. Those yellow lines, again, on my screen here. How about the November 2nd, the end of October, in essence, the October 26th, the week that began October 26th, marked what? Marked a low out there. Are these October? So if we learn to reframe and elevate, if we learn to take information that comes, that's why next October, right? When all of a sudden, September, October, people are going to talk about the crash and the markets have their worst month in October. That's somebody who would be saying, hey, the glass is half empty, right? You're going to be saying the glass is half full. You're going to say, you know what, I'm a leader out here, and I anticipate. Leaders anticipate, right? Losers react out there. What you're going to be anticipating is that you're going to have, in October of 2015, another buyable bottom. But we'll deal with that when we get there. The important thing is we can go back in time, and in October's we make significant lows. Now, let's take a look at where we're at right now. First of all, what do we know? We know a couple things. Number one, we got his wide thrust indicator signal off of this bottom out here. There's only been like three to four of them in the last 40, 50 years out here. Those are important signals out here. This, again, it's a weekly chart that we're taking. Let's decorate the chart just a bit more. Let's go see what else can we learn about this chart out here. Let's go take a look at this chart. This is we're going to put in our horizontal. So price this week made a low out here. And what's so interesting, now, I've taken the work of Bud Rolfs, only I've Stevieized it. And why have I Stevieized it? Because I've been able to go ahead and use data by electronically, by being able to just simply have the tools of the data to go out and identify opens and closes on a chart out there, on a daily, on a weekly, on a monthly. Bud's work just primarily takes a look at a monthly chart, and it follows through to those primary trend lines, channel lines. They become the same for all time frames. But what I've identified is, hey, if the body of the candle is the essence of price, which it absolutely is, then we need to take a look at a weekly chart different than a daily, than a monthly. Sometimes they line up. If we take a look here and we take a look at the horizontal trading ranges out here, what I'm going to do is I'm going to put the dailies up on my screen right now. Even though we're looking at a weekly chart out here, I'm going to put the dailies. So they're going to go ahead and populate. I've just turned those on. And what we'll see is, and those are the blue lines going across my screen out here. So these are based on opens and closes of dailies. And by the way, go back to 1996. So the data that I'm using goes back pretty darn far out here. Now, here's the interesting thing. When we take a look at the S&P 500, the actual daily horizontal trading range, the actual low, the actual old resistance that should have become support was 1974.13. Now, the actual low that we saw this week, 1972.56. Are you kidding me? How does that work? It just does work. It's kind of like these October areas, these October lows, they work too, right? Now, I'm going to go ahead and apply the monthly horizontal trading range. I'm going to go ahead and hit a button here. Going to go ahead, and that will show up on my screen out here. And if you're an e-signal user and you like this tool, and my goodness, you should want to use this tool, go over to Traders Formula Consulting. Okay, you can test it for 30 days. This is a great tool out here. And I'm actually going to go ahead and turn the dailies off just for a moment. Those are the blue lines. So let me do that out here. As we turn that off, we take a look at the monthly. You can see that the daily and the monthly actually lined up with each other. So when we take a look at the month of this month here that we're in, we can see that price came back 1971.02, the same level, same thing on a monthly chart out here. Now, so we know that is substantial, significant support. What has the market done here? Market got up over this level back here the week that began October 27th, came back, got up to basically the midpoint level of this, came back and just simply tested a level of support to make sure that it really is support out there. And by gosh, it most certainly is support up because we've seen that hold. And we've seen that hold, and now what does that say? You can see that midpoint out there. I've just gone ahead and put up the midpoint. Those are the little dotted or dashed lines going across my screen, and those were priced out on a monthly basis out of the 2078 area. 2079.47 is what we saw the market actually hit. So a key level for us to be watching inside of the S&P 500 is going to be 2079. What happens if price gets above 2079? Hey, the expectation level is already set here, right? Price should move up to where? 2185. Where is it that we know that the S&P 500 is headed to on a longer-term basis? 2350 to 2450. Or 2185 after we get above the 2079 level being the next level of resistance. Now, I'll go ahead and I'll turn on the weekly horizontal trading range lines out here. And again, all this is just automatically calculated for us. We can see that getting above and staying above this 2028 level. See, if I only use the monthly and I carried that forward to a weekly to the daily, I'd be missing out on fabulous information. And on Fabulous Friday, we do not miss out on fabulous information out here. So the key to be watching for, if you want to know, because I know that you're listening to say, Steve, okay, you said we were going to get another bottom. Is this the other bottom? You tell me. You tell me. I'm just really reporting to you what the charts are actually communicating to us, right? That's all that I'm doing. I know that there are people out there and they think, hey, Steve is bullish or Steve is bearish out here. Really, all I'm doing is just starting with a blank chart, just like you should do each and every day. This is our palette. And what we do is we apply tools out here that help us to identify where price is going to. You can do this. Shoot, I teach folks to do this in my 7-week workshop out there. It is the holiday season. We're in the last swing here. Somebody's looking to buy you a gift out there. Come over to the homepage at TFNN.com. The upper left-hand, over on the left-hand side, this little carousel, up arrow, down arrow, sign up for the 7-week trading course. Give them the gift of giving. Give them the gift that will always give. If you've got children out there, you want to be able to teach them these things out here. You want to be able to teach them how to manage money. There is no better place to do it than here at TFNN. This is Fantastic and Fabulous Friday. This is Steve Rhodes. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 34, S&P futures up 4 1/4, Nasdaq up 12, and the Russell 2000 up just a tad. Let's go see what's going on in the currency world out here. So if we take a look at the euro, Japanese yen. Let's take a look at this here. It's not doing a whole lot. Kind of an interesting dynamic that we have going on because this is the currency pair. This is the carry trade out here that impacts our markets. So where we see our markets have gotten back up to the highs, the euro, Japanese yen really hasn't done much in the way of moving here for the past several days. So it's just a little bit of a, to me, it's a little bit of a cautionary sign to suggest that as the markets are up at these highs here, that, we should expect maybe a slight pullback or pause or something along those lines out there. So it's not like this currency pair has fallen apart either. But what we aren't seeing here is we're not seeing that complete follow through to the upside inside the euro, Japanese. And of course, if we take a look at this on a monthly basis, let's do that, because you know what, and this is important because as long as this remains the carry trade, it is something that we just simply need to be paying attention to. And if we go from its high back here, this is back in 2008, July of 2008, down to the lows out here in July of 2012. What's important about this chart for you to take a look at is really a couple things. Number one, What we know about the Euro-Japanese yen is it's made it above the 0.618 retracement level, which is 140.99, and the 0.786, which is the natural floor, the natural area where price will move to. Right. If you take a look at every pattern that's in the marketplace, and you can utilize the Fibonacci retracement ruler, expansion ruler, using 0.382, 618, 786, as well as the 1.272, 1.618 levels out here. What we know is price typically gravitates up to one of those levels once you pierce through it. In this case here, the Euro-Japanese yen has done that. We're on a monthly chart, so it says 153.73 out here, monthly chart. There's no reversal signal or anything along those lines. That bodes well for the market to continue to move higher into the favorable seasonal cycle, which began on November 1st through April 30th out there. So even though the daily here is not necessarily confirming the move higher, it's not anything to necessarily be completely concerned with. Just something to make sure that we pay attention to it. If we take a look at the Euro U.S. dollar index, this is the one that impacts the U.S. dollar. It's the U.S. dollar index itself. Here's the monthly chart. What the monthly chart shows us is really, this thing has been a consolidation pattern really coming back. The lows out here, important lows in essence that it hasn't gotten down to, but if you take a look at the lows in June of 2010, the lows in July of 2012 out there, and those are at the price points of about 1.204. Maybe we're going to continue to see a move lower out there. But if we look at the daily chart, we did see a change in trend that had taken place out here. But much like gold, right? Just like gold, you think that the euro against the U.S. dollar currency has an impact on the direction or price of gold? Yeah, I'd say it does. We saw the euro break out of this short-term descending trend line. That's one coming. This is a daily chart, by the way, that we're looking at. This comes back to October 2014, and all the touch points around here. I mean, this connects. This trend is very important, and so it connects against that touch point of October 21st, the touch point of October 29th, November 19th, and we go on and on and on. And price broke above that and came back through it with some conviction. Right, a wideish ranging bar on a daily basis, December the 17th, a couple of days ago out here. So now it's back at the lows. Failure to get back above this level does not bode well for the euro. Says that, hey, it wants to go back to those June 2012 lows that we took a look at just a brief moment ago. So that's what's going on inside of this currency pair. Well, let's go finish this off and look at the Great British Pound, see if this thing has decided to do anything, and the answer is no. Just continue to navigate and trade sideways out there. Now, of course, what you might also be asking is, hey, where's the mark? I gave you the S&P 500, right? And what if we were looking for some additional confirmations of what the market wants to do out? I see the DAX is off 87 points this morning. The FTSE's up 27. That's kind of interesting. But if I come back over here, let me do this, and let me select here's the ES Mini. I was going to show the 120-minute chart, but I got the 300 minutes on my screen here. What we know about the ES Mini is the following. Number one, that as it was making that low coming into Wednesday out here, it was making this A to B equals CD to the downside. Now, what it did was it made a 1 to 2 A to B equals CD to the downside, getting down to that price projection, 1969 and a quarter. What actually got down to was 1968 and a quarter. Missed it by one buck. Are you kidding me? And speaking of 1 to 2 A to B equals CD patterns, I believe that this week is this is the weekend here for Tom O'Brien's gold report out there, where you get an autographed copy of his book, where you would know that when you do a 1 to 2 A to B equals CD, you're typically going to do something else. Well, guess what? These markets, it's V for victory, because they most certainly have done something else. They've made that fourth move out of any A to B equals CD pattern, or Gartley buy, which is what this really set up here. That was getting back to its highs out there. The question is it going to do number 5 and make an A to B equals CD to the upside? I believe that it will. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Races. We got the Dow up 12 points, trade up at 17,790. S&P up 4, trading at 2,065. Composite up 3 at 47.45. Russell 2,000 down a couple points, trading out at 1190. DAX, though, up 111 points. The FTSE's up 22 points. We'll go take a look at that here in a moment. Gold's up $3. Silver is flat. Light sweet crude up $1.59. We'll take a look at that as well. Leading the charge, the upside here this morning, we got Red Hat. This is green. Turned its color to green hat. It's up 10%, up a nice $6. CarMax up $4.60. That's about 7.5%. Cintas Corp up 4.5%, up $3. ISIS Pharmaceuticals up 5%. Madison Square Gardens up 3.5%, up $2.60. Aratana Therapeutics up 20% this morning, up 270. Granger WW up that's just up a couple bucks. Sherwin-Williams up about $1.76. To the downside here, you've got Immunology Inc. off $5. Finish Line down $4. Wisdom Tree Japan Hedge Fund off $4. Biogen down $3. Nike's off a couple of bucks out here. Stratasys 3D system manufacturer SSYS off about $1.68. Okay, question that came in during the breakout here. I believe it came in from, might have come in from Victor, is my guess out here. And he or she, whoever actually sent me the message, I can't tell for sure, but is asking about natural gas. The question is, will natural gas find the bottom? Let's take a look at natural gas. Let's look at the current contract. You got natural gas down 15 cents right now, trading down to $3.49. So let's go back and take a look. Here's a natural gas contract. If we were going to go ahead and so the question is, will it bottom? Yeah, it will eventually bottom, but has it bottomed? No, there's been no reversal signal, and I'll put up on my screen here. This is an important chart for you to understand with regard to natural gas, why it works this way. Welcome back, folks. Dow's off 22. S&P is up a point right now. We're going back out to Nashua with Jerry to take a look at the Great Panther. Now, Jerry, the position that you're in Great Panther, you're looking at what I don't recall is just a longer-term position as a trade. I think you were saying it's just really kind of a weekly type trade, intermediate-term trade for you?
An intermediate to long-term.
Yeah. So that 65 cents is just really a key level. You know, you bounced off of that. You moved higher yesterday, but the volume was just kind of like so-so. You know, it was 1 million shares, and you had 1.7 million shares to the downside on the 16th out here. So I still maintain that 65-cent area is key for you. At this stage, the piece of information that you've got is today's pullback going to be with light volume? It's 257,000 shares, 25 minutes of trading. It's testing now the most current swing point low that you've got from a few days ago, the 68 cents. You'd sure like to see it close above that today. You know, not just above 65 cents, but you'd sure like to see it close above that 68 cent area. But you've held it so far. I don't know what to, what more advice I can give you other than continue to watch that 65 cents, and probably don't let that low of December 16th see it close below that of 56 pennies out there. Yeah.
Sorry, one question I had is that you said that it hit 1.7 million, the other day when it dropped below 65, right? Hit a low of 56. But when it hit on June in the 2013 time frame, when it hit the 65 initially, it was at 3.58 million. Would you consider this to be a retest, even though it did close below the 65, but then came above it the next day?
Hey, welcome back, folks. Sorry about that. And Jerry, hopefully you're still listening here. I've had a major internet outage yesterday and thought we had fixed it, but clearly not. So my apology there. So back on Great Panther, what I can tell you is that it moved lower with volume. That was back on December 16th, and yesterday it moved a bit higher, but it was on lighter volume than that moved lower. So longer term, real long term, the chart still looks pretty good. You had asked me about silver and gold as well. With regard to the metals, the key here is that, and I wish I could show this to you on the chart. Because I don't have an internet connection right now, I can't. What I can tell you is if you can access the current silver contract and gold contract, you can draw a trend line. And right now, what I know about gold and silver is they have both failed at that trend line. They broke out above it, and they have come back underneath it, and that is never a real good thing. You want to see trend lines get tested, just like we took a look at in the S&P 500. We saw those horizontal trading range lines. They were tested. They were rejected. That's how you want to see a trend line dealt with. So far in gold and silver, I've got to remain neutral to bearish because those trend lines have failed. Well, folks, have a fantastic weekend, and I look forward to seeing you bright and early Monday morning. Take care. Stay tuned. The Nadex Bull Bear Binary Option Hour is up next. Take care.